Hello, YPN. Alex Daley here. Today we have an interview with Rhys, who is from Let's Co. Now, Rhys has recently, or I don't know how recent it is, but has recently moved over his portfolio over to social housing. And we're here to explore that today, because I know social housing is something that a lot of people talk about, but not a lot of people have actually explored themselves. And obviously, Rhys has done this for a reason. We're going to explore why, and we're going to explore whether it's something that you should do yourself. Rhys, why don't you take it away and kind of explain who you are, talk a little bit about yourself before we dive into things.
Yeah, sure. Thank you for the introduction, Alex. So I guess probably the best place to start is where the inception of Letco came from, I guess. So back in 2019, my business partners, Safe and Cass, we sort of set up the letting agency to manage their investment portfolio. And the managing agency sort of grew more and more sophisticated, to the point where we decided to start offering out those typical like letting agency style services to other customers. And then from there, we started to look at how we could optimize the portfolio, that one portfolio, and then the portfolio of the customers. From that optimization period, it then grew into those customers asking, could we find deals for them, etc. So we sort of built out this ecosystem inside of like our network, if you will, and inside of the company. So that's where the journey started, and where we are now is we've just gone through an asset optimization exercise where we've gone through the full management portfolio, identified which properties we can get leases in place with RPs or supported housing providers, and transition them away from the private rental sector.
Fantastic. You mentioned that RPs. What are RPs?
So an RP is a registered provider. So that's somebody that's regulated by the RSH, which is the regulator of supported housing. And they are like legally allowed to provide support housing.
Okay, great. So I guess the first question, the obvious one is what is social housing? Take us through what social housing actually is.
Yeah, so I guess there's two main distinctions, and as we mentioned earlier, sometimes the terms social housing and supported living are used interchangeably. So the key difference is being supported living is where a service user has live-in support in the property, and then social housing is just the housing element that's provided by a housing provider, if that makes sense. So there's two separate things. So supported living has a care element, and then social housing is just the housing being provided. So that's like the most simple way to explain the two.
Okay, fantastic. And you focus on the social housing aspect, not the actual supported living aspect. Is that correct?
Yeah, so our preference is always just the housing aspect, and we work with registered providers, giving them our properties, just because we find the covenant strength on the leases they can offer is typically better, because they're bigger organisations and they're more heavily regulated. Whereas somebody that's just providing supported, they have from a care element, all they need is a CQC registration, which is a lot easier to do. It's by no means easy, but it's easier to obtain than becoming a registered provider, if that makes sense.
So it essentially protects you as the provider of the house. It protects you a lot more, and especially I guess when you're looking over a larger portfolio, having that protection over can really make the difference.
Yeah, definitely. And when you're looking at the bigger type entities, so your Serco, your Mears, your Clear Ready, Serco is FTSE 250, so that alone gives quite a lot of strength. Because we can see all of their balance sheets, we've got a really clear window into what's going on, their press statements, the contracts that are coming from government that they're being awarded. We have full transparency on that. Whereas a smaller provider of care that's provided supported accommodation, we might not be able to see. They might be working under the exemptions when it comes to micro entity accounts, so we can't always see like a full balance sheet, so it's a little bit harder to do due diligence, and a lot of those leases are agreed on personal relationships with people in those companies. So it's a mixture. Sometimes you'll find that your bigger nationals can cover 90% of areas, and then you need key relationships with your smaller providers or your smaller support living providers in those 10% of areas where they can come in and cover where the big nationals can't.
Okay. Cool. No, that makes sense. I guess the next logical question is why switch? Because a lot of our investors will be working in, will have private rental sector kind of properties, often doing well, sometimes not doing that well. but there's going to be, there's going to be a group in there who are looking at their portfolio and saying, well, I do very well for my rents. Actually, it works. I don't do too much maintenance. My tenants are quite good. And I imagine that when you were working with your, with your landlords and your investors, they were in the same position. They were actually had properties that were doing quite well, and it wasn't necessarily like they're struggling. This is an assumption here. So yeah, why switch? Why switch if it's working well? And one guess why switch if it's not working well?
Yeah, so it's a mixture of different reasons. Now, we've done this as like a phased approach, so it wasn't a case of woke up one day and bang, got everybody out and switched them all straight over. It was the way that we've done this is very much a case of as and when something has come up empty, we haven't purposely made anybody or like served any Section 21s or anything like that because of the switch. It's very much a case of when something's empty, we convert it over. Now, the main reason being is that when you're working with companies that are operating the asylum contract, such as your Serco, your Mitch, Clear Ready, you can get paid on a room rate rather than you can on a family home rate. So for instance, something that you might, in our areas, sort of across the East Midlands and the Midlands, typical rents we see anywhere from sort of like 800 to 1,1200 for a single family home, depending on whereabouts in the Midlands it is. But if we're working, with somebody like Circle or Mears, we have access to rates anywhere between sort of £75 per week per room, all the way up to sort of £85-90 per week per room. And that's then looking at, what's that off the top of my head, like £1,300-1,400 per calendar month, up to £1,500-1,600 per calendar month sometimes. Now, if the properties are unencumbered and there's no lending on those properties, then that can be a huge advantage, just from an increased return perspective. And that alone is the biggest driver right now, just to beat the interest rates that we've got across the portfolio and our customers have across their portfolios as well. So it's how can we beat those rising costs? But then not only that is when it comes to the end of a tenancy, I'm not sure what the audience is going to have experienced over the past sort of year, 2 years, but due to the increase in material cost and labour cost, we've seen sort of tenancy renewal works like light refurbishment, carpets and paints type refurb go from like 1 or 2k up to 5 or 6k, and that's essentially wiping out the previous year and sometimes even the previous 2 years worth of profit. So if we can fix a term of 3 years, 5 years, 7 years, then we can actually write out we can cost everything up for that period, and we know exactly what our net return is going to be on that basis, so long as we don't get during that time a ridiculous mortgage rate again. But that's a massive thing for us, as well as those end of tenancy costs. That's been something that's increased quite massively and a big driver in our decision making. And then on top of that, we have like the maintenance element as well. So quite often we're creating or we're pushing for contracts where the tenant will be responsible for the maintenance. We'll obviously take on any structural, boiler, windows, roof, etc., which we'd have responsibility for anyway. But any internal sort of small repairs, wear and tear, will be the responsibility of the provider or the provider to pick up, depending on what it is. So that just adds in another safety net as well.
Okay, so predictability and I guess safety. You mentioned one thing there that I want to pick up on, which was mortgages. So you said this was perfect for companies that are unencumbered, meaning no mortgages. What about properties that are mortgaged? This is my understanding. This is a bit of an issue because a lot of lenders aren't too keen on it. Are there lenders that are, and I appreciate you're not a mortgage broker and you can't speak to the exact, but are there lenders out there that you guys have found that are working with companies, with companies or landlords who have this? Yeah, how does that all work from that front?
Yeah, so we've got a specialist broker that we put them all to. So I don't get involved in like the specific of the companies who are actually lending, but we haven't had an issue with it. But one thing that you are doing is if you are flipping your sort of property or you're changing your tenant type, then it's really important that you do let your lender know about that, because the majority of them do have a problem with it, and it's all basically down to a PR issue. If you default on your mortgage and they have to evict a vulnerable family or some people that are seeking asylum, it's going to look really bad in the press, and that's where a lot of the premise lies and why their attitude is quite negative towards it. But we haven't had an instance yet where we haven't been able to get lending on one of these properties through the certain brokers that we're currently using. So it's not something that's been restrictive for us. The rates have been more expensive, but where we've had that uplift in rental value anyway, it's sort of cancelled that out, if that makes sense.
Sure. Ironic, of course, that it's a PR. It's deemed as a PR nightmare to to force evict, an asylum seeker. But yeah,
Yeah, like I say, I don't want to talk on their behalf, but my sort of reading between the lines here is that's sort of what's going on. I can't see how that it increases any more risk for the lender, if that makes sense. If anything, gives them more security because the rental income's going up and the stress test becomes a lot better. So it's just one of those social issues, I think.
Sure. How much roughly extra have you been seeing that mortgage rate being hit by? Because you have to factor that in, obviously, in terms of profitability in it. By the sounds of it, it's still possible, but is it a chunk more, or is it just
obviously it depends on sort of personal circumstances. So based on what we're seeing anywhere from like 1% to 2%. So it's not something that's been absolutely catastrophic, but where if you're at a point where you're already at 6-7%, by the time you're going to 7-8%, it does start to get quite a lot. But like I say, the increase in cash flow is offsetting that anyway. So it's not something that we're too concerned about. And obviously, as rates continue to decrease over the coming months and years, it's something that we can build into our modelling anyway. So.
Sure. So you mentioned that you then essentially these would go out on a per room basis. Does that mean that these properties need to be HMOs? Are there restrictions there? Does it still work with a 2-bed terrace, or do they need HMOs?
So this is the key part and the really important part. So it completely depends on who you're working with as a registered provider, and then also obviously the property's location. Now, we've been fairly lucky where pretty much all of the residential units that we've purchased have been outside of Article 4 areas, so it's not something that's really affected us. And when we're sort of helping our clients to buy these type of properties, we're actively encouraging them to buy outside of Article 4 areas anyway. There's been a couple where we have needed licenses, and there's been a couple where we haven't needed HMO licenses, but the local councils are always changing their attitude towards it. Now, some registered providers that you work with will have their own license that they operate under. So you as the landlord won't necessarily need a HMO license for that property. And for instance, this is something that we were doing across Barnsley and some of South Yorkshire, was we didn't necessarily need the HMO license because the housing provider had the HMO license, and they were responsible for making sure that there was fire doors, there was interlinked smoke alarms, there was a fire alarm panel, and emergency lighting, etc., etc. But recently, that council has changed their stance to the point now where we do have to become the license holder. But because it's previously used as, it sort of pushed us through the process, and whether they've done it under grandfather rights or something, I don't know how internally they've done that, but it is something to be conscious of. So if your property is an Article 4 area, you need to understand, are you going to be responsible for licensing, or can the provider potentially use their license? If they are a registered provider, are they able to deal with that for you?
Because that's going to be an issue. We see every month a new place. I was looking just a few days ago that I think Derby have just announced that it's going to be Article 4, Article 4 there, and that the reality is that's going to kill off a lot of the potential to create HMOs, as we know. Does this sort of thing work on your 2 beds or your 3 beds that aren't actually going to be HMOs? Can it still work like that, or no?
Yeah, they work really well for us. So like I say, we're just focused on outside of Article 4 areas. So the 2 beds often work really, really well for us and what we're doing in our strategy, because we're all about how can we get a 2 bed to a 3 bed, a 3 bed to a 4 bed, or maximize the rooms by maybe just doing some internal stud walls. So could we convert a living room, a dining room, etc., obviously subject to the requirements of the provider. But what can we do with as little money as possible to get that extra bedroom on there? And that's what bumps the rental value. So you're going from a single family home up to a 3 bed that's giving you £80 a week per room. That's where you start to see a really good uplift, and you're not necessarily creating these big monster HMOs that are all done on commercial valuations with en suites in every room. This is very easily switched back to a single family home if you ever needed to exit. You haven't dumped in 100 grand just to do a refurb to create this all singing, all dancing product. It's very much a functional, safe, effective product.
But reading between the lines, I think you're saying then that if you were, let's say you had a 3 bed house in an Article 4 area, so that you weren't going to get it to HMO, would this mean that the strategy wouldn't suit here, or can it still work? I'm reading that you're saying it probably wouldn't.
Yeah, it's difficult to say, because if you've got a provider that can take over the licensing side for you, and the council are happy with how that works, then there's a chance that it could work. But it all depends on what that provider can pay in that area to make the numbers work. If it's already a 3 bed and you can't get a 4th bedroom or even a 5th bedroom out of it, then it's going to be difficult to make it stack. And the cost of doing the work to get that one extra bedroom, you need to weigh that up and model it out over the lease period and run your increased finance cost, etc. Excuse me.
Sure. Okay, so we've covered the mortgages, and that's a challenge. What other kind of challenges do you think people will likely face when looking at this strategy, and when weighing up whether they should convert their portfolio there or whether they should continue to buy? What challenges do you face?
To be honest, I don't think there's too many challenges these days with it. I think one of the more difficult things used to be actually getting in contact with the providers and building a relationship with them and knowing who to speak to, how to speak to them, and what their process looks like for onboarding properties, writing the leases up, etc. But I feel like it's sort of been a buzzword the past 2 or 3 years, social housing, if you will, and now we're sort of at the peak of what it actually is and the amount of people that are aware of it. And everybody these days has heard of social housing or supported housing. It's difficult to say. I think one of the biggest challenges, other than knowing who to contact and who's actively sort of leasing properties in your area, might just be a case of actually managing a sitting tenant. So you might have a property where you can see the potential in it. If you could get it onto a room rate, maybe the biggest challenge is going to be, well, how can you sort of have that conversation with a tenant that maybe they're paying under market rent or at market rent, but in the back of your mind that you can be getting almost double the rental income on the property. That's probably going to be one of the biggest challenges. And where we are in society at the moment, you don't really want to be sort of evicting people for no reason. It's really difficult. So if you can sort of hang on and wait till the end of the tenancy, then maybe wait till the end of the tenancy and have that conversation. But all in all, I wouldn't say that it's too difficult to do it. Obviously, you need to let your insurers know, you need to sort out your lending. But other than that, a good broker for both of those things can help you.
Sure. And you mentioned there that probably traditionally the hardest thing being reaching out to providers. What is your advice there? What's the route for people?
It's a little bit different for us because we obviously have the established channels where we go through. We've got strong relationships. But I think if I was going, again, a lot of the big nationals, so your Serco, Mears, Clear Ready, they hold landlord events every couple of months. I think they do quarterly at least, especially Serco and Mears. And I would just go along to one of those and try and meet the local reps in the area. And if you say to them, I've got a portfolio of X amount of houses, I'd be really interested to, like lease some stock out to you, I'm sure they'd be able to put you in the right direction. But failing that, it's quite easy to look up or even on Google, like what are the latest grants that have been awarded for social housing or asylum seeker contracts. You can find out exactly how much money is being awarded, and then you can see who wins those tenders through the tender portal. And a lot of this stuff gets reported in the mainstream news as well. So if you can see that Serco, back a couple of years ago, were awarded £2.9 billion for their asylum seeker contract, then if you Google Serco, it's not really too difficult to find out on their website how to submit a property for approval. So Google's really going to be your best friend. The difficult part is if you're in an area where the national providers don't necessarily operate. So you're in like a small, like a blue zone almost in the UK, if you want to call it that, and you have to find like a niche independent care provider or somebody that's going to come in and lease that property as somebody that's not a national. That's where it's going to be quite challenging, and that's where you're going to want to use resources like the CQC register, find out who's registered, like what registered businesses there are in your area, and understand if any of them have the capacity to actually lease properties and whether they're set up with housing associations as well. That's been quite important, that if you're working with a care provider, there needs to be two distinct elements. The housing association need to be leasing the property and the care provider need to be providing the care. But because the care providers are normally smaller than the housing associations, it's easier to work backwards and approach the care providers, but then just make sure they're working with the housing associations. So they almost introduce you to the housing association, if that makes sense.
That makes sense. What about damages and things like that? People are going to have a concern about damages, especially as they're not going to know who the end user is into the house. They've not vetted them themselves. What happens with damages? Is that covered by the other company? How does that all work?
Yeah, so the way that we do it is we make sure there's a tenant damage clause in the lease, which lays out the scenario of if the tenant causes X damage, then who will be responsible for it. So that's the way that we protect ourselves. But because these companies have, there's dependencies on their contracts. Let's say you're working with a smaller independent care provider and a housing association. If you're renting your property to them and their tenant, their service user might be somebody from the local authority that's been referred to them that has, I don't know, behavioural issues, and maybe they always pull doors off the hinges and stuff like this. Those care companies have health and safety inspections internally. They'll have an internal process for that where they should be doing it no less than once a week. They should be doing those inspections. They should be daily. And that should mean that any little repairs or instances of tenant damage that's significant should get picked up and actioned very, very swiftly. And if they don't, they're then at risk of losing that placement, losing their income, if that makes sense. So they're heavily incentivized to make sure that the property is well kept. With the asylum contract, it's a little bit different because there's not people going in there every single day and checking the condition of the property. However, based on our experience of working with the nationals like Serco and Mears, they're doing their monthly inspections, and any maintenance on there that's related to tenant damage, the tenants usually report it quite quickly anyway, and Serco get it actioned. So all that we do is put in mechanisms to make sure it's followed up, and we get copies of all the reports on a monthly basis.
Okay, so it's still pretty hands off for you on that front.
Yeah.
And then I guess that covers damage. It's all about work before to get it up to spec. You know, you other than the obvious putting the sidewalls and creating these rooms, are you furnishing these these places? Are you having to add in extra safeguard in various other ways? What's the usual look like there?
Yeah, again, completely depends on who the provider is, where the property is as well. But let's say we're just looking at the national, say Serco and Mears asylum contract. The most simple way to think about it is just it's got to be up to HMO regulation. So room sizes, interlinked smoke detectors, emergency lighting, fire alarm panel if the property is big enough, fire doors throughout, kitchen work surface space, adequate seating, all of this sort of stuff. So the best way to think of it is your HMO regulation. There's no sort of specialist requirement for them. For those guys specifically, if you're working with a care provider and a housing association, it can be a little bit different. Sometimes they might look to there's scenarios that we've had where they have a special placement that might be in a wheelchair, and they've paid towards the refurb cost to put in accessibility ramps and handrails and things like this, and a wet room. So it completely depends on who you're working with, but typically fire doors, interlinked smoke detectors, adequate kitchen work surface space, emergency lighting, alarm panel, furnishing for the amount of people. So that's single bed, single mattress, wardrobe, chest of drawers. I'm trying to think what else off the top of my head. Dining table, the amount of people that are there, and then sort of sofa/seating for the amount of people that live in the house as well.
So your standard kind of HMO stuff, I guess, is it's a summary there.
Yeah, there's no sort of specialist requirements beyond that.
Okay, great. Obviously you've moved over this for a reason, and you've mentioned that was kind of profit optimization. Can you talk to kind of what you're seeing kind of before and afters? I know you had a particular case study, I think it was in Doncaster, that we can kind of talk through, and we will discuss on a wider portfolio basis in the actual article, but for today's sake, can you kind of run us through some numbers?
Yeah, so the one that I had in my mind was a property. It was in like a really nice residential area of Doncaster. The tenancy came to an end because the tenant unfortunately stopped paying their rent, as I think we've all had to go through that situation at least once, which is not ideal. But that was a young family that was in there. They were paying £750 per calendar month, and that was a 3-bed semi with a driveway and a garden. So really good value, lovely home, had all been just refurbed before they moved in. So a bit of a shame that it had to end like that. Recently we've sorted the property out, so I think it needed about £4,000 worth of work, £3,500–4,000 of work to get it back to a lettable standard, which was fresh carpets throughout, and the kids had drawn over every single wall, so all of the house had to be redecorated, which was not ideal. And then there was a lot of rubbish that needed to be cleared out. And we've recently re-let back out on a contract with a provider in the area, and I believe they're paying £78 per room per week. And we've converted the living room, so that's now gone from a 3-bed semi to a 4-bed. So
yeah, what are we looking at? Let's do some maths. So that's £1,343 per calendar month. From 750.
Yeah.
just under double,
Yeah.
and you have the added bonus of not having to worry about the maintenance, etc. So actually, net you're probably coming in at yeah, essentially double. Again, it looks slightly different that in reality, because lending costs might change if that person's on a mortgage, so it's not necessarily going to be double. But yeah, you know, we're looking at, even once you've taken off some for lending, etc., you're quids in there, so it makes sense. You do that over the course of the portfolio.
Yeah, and don't get me wrong, like they don't always come in that good. You know, sometimes it might be that the provider's like, well, we can only take this as a free bed, even if you can get an extra room out of it. We don't have a requirement, or we can't take it as a 4-bed in the area, or whatever. They don't, or maybe the rate might be less. It was just in this scenario, everything worked out really well. We had a smaller independent provider that can sustainably pay a little bit more, utilize all of the bedrooms, and the property didn't need a massive refurb. Yes, it was a bit of a kick in the teeth that we had to spend £3,500–4,000 on it with all the carpets, the redecoration, etc. But in this scenario, it worked very, very well. This was definitely one of the better scenarios. So, well, after the call, I'll send through some examples. You know, some of the, like, this was obviously a really good one, some of the more average ones, and some of the worst ones as well, just to give people an idea on the spectrum.
Sure, I think that would be helpful. It's always good to see the champion case studies, but equally, you know, what an average, what average looks like. So for someone looking in to get into this, what kind of advice might you give them?
So I guess the advice will all depend on where they're coming from. So if they have a portfolio that they're like looking to optimize, then I would say it's all going to be about relationship building. So finding out who the brokers are that can get you a lending, the insurers that can help you from an insurance perspective as well, because there's a lot of problems happening right now, especially in the insurance sector, where people are just writing business and they're not necessarily checking that the properties are actually fully covered. And it's something that I've had a lengthy conversation with my broker about a couple of weeks back, was where, you know, the quote that went over to the client was quite expensive, and they were quite shocked by that, just because it was while the property was empty and it was being refurbed, and then eventually it was going through Serco, this one. But he was basically explaining to me that what they're seeing on their side at the moment is that people are just writing business, and the wording in the policies aren't even supportive of the actual properties themselves. So good finance broker, good insurance broker. Like I say, if you're optimizing existing portfolios, relationships with the providers, so it's attending the networking events put on by the larger nationals, so Serco, Mears, and Clear Ready for your asylum contracts, and then also utilizing resources like the CQC register, finding out who these registered providers are from a care perspective. So the care providers, find out who they are, find out who the registered managers are, and get in contact with them and start speaking to them and letting them know you have these properties available. Would you be interested in renting them? But I think the biggest thing is meeting people face to face. If you're really serious about doing this, then everybody's blasting emails these days about, you know, I've got this property, I've got that property. Can you pay £2,000? Can you pay £3,000? Blah, blah, blah. But if you genuinely go to some of these offices and sit down and try and meet with people, I think that's where you'll have the most success, because this is all about relationships. I think we've done so well with our optimization because we have those personal relationships with the teams that we work with. You know, we can pick up the phone and they answer, we can send a WhatsApp message and they answer. We don't have to go through the formalities of the email, go through the departments and, you know, call through to the admin team on the front desk, if you will. And that's what's, you know, really benefited us. And then I guess if you're on the other side of that coin, where you're not optimizing your purchasing, the biggest thing that you can do is establish those relationships so that you can do your post checks before you purchase. Now, it depends on the policy of the provider, but quite often you'll find that their attitude towards doing a postcode check for you before you purchase the property is quite good. So they'll let you know before you even purchase it whether the address works for them and what they could potentially pay, subject to any renovation work or any like safety or health and safety works that need to be done, such as, you know, like your fire doors and stuff, before you've purchased it. And that can be a really good incentive for people looking to buy. That's really, really helpful.
Yeah, you can mitigate a lot of risk if you can do a postcode check and see what things are looking like location wise. Then, so obviously these happen to be out of Article 4. I guess you probably have you can play around by doing kind of postcode checks and things like that. But you're likely then talking out of the big cities that are going to be Article 4, and in the slightly smaller areas that haven't been hit with that. And then you're looking at those kind of properties. Is that right?
Yeah, because and that's where you get the blend of, you get decent capital appreciation because you might be looking at secondary, tertiary locations that are commutable to major cities. So you're getting like good asset prices as well in good locations where there's a good chance of capital appreciation. Then you're increasing your cash flow and your rental yield drastically in most cases, and quite often you're paying below bricks and mortar, or even at bricks and mortar sometimes can sustain, the works. So it's easier to put the deals together, even with deals that are on the market. Obviously, buying well is always your best bet. The better discount you can work, obviously, the better position that you're in from a long-term perspective. But yeah, buying outside of those major cities actually works really well as a strategy perspective, because you're not then stuck. Let's say if you worked it the other way around, you've got a monster 10-bedroom HMO in the city centre of Manchester that you've paid X amount of money for, let's say 600 grand. The person at bricks and mortar, maybe that's only worth £300,000 or whatever it might be. But who's going to buy that at a commercial valuation? You've got a very limited exit on somebody that sees the value in something like that. Whereas what we're focusing on is single family homes that are on those commuter belt secondary, tertiary locations that then you're not paying over the odds for from a bricks and mortar perspective, if that makes sense.
Mm-hmm. No,
just kind of layer in as many wins as you can.
Makes perfect sense. Awesome. I mean, from my questions, that's pretty much it. Obviously, right at the end, we'll cover kind of how people can get in contact with you and how people can kind of get in contact, follow your journey, etc. But before we do that, do you have anything else that you want to discuss on here? Any questions that I should have asked that you want to answer? Anything. You're the expert in this. I'm just interviewing you. So yeah, you tell me.
Yeah, it's a good point. I don't think there was anything in particular that you really missed off. I think we've covered the majority of all bases. I'm just trying to think if there's anything like really granular, but I don't think there's anything else. I mean, maybe on the types of companies again. So if we were to revisit that, so where we see the best bet, so your best approach is to obviously approach nationals first, and then underneath that you've got your smaller care providers, but then you can go sort of like a level below that to the point where you're looking for really, really niche operators. Sorry. And sometimes where we've had good success is finding businesses that operate sort of small independent children's homes. Mm-hmm. And that's sort of like a subcategory of care providers. But just really explore that and CQC. And I would definitely look into that and find out what these other niche businesses are. So for instance, we work with some people that over in Lincolnshire that actually operate mother and baby care facilities, and these are like really, really super niche facilities. But let's say for us it works really well, because if we've got this really quirky 1-bedroom 40 square meter single story house or bungalow, it's difficult to stack that deal on the private rental sector, especially with the cost of lending at the moment and the capex that we have to put into that deal. But if you've got somebody that's operating this really niche mother and baby unit, it's quite an isolated property, so it works really well, and there's good links into the city centre. And for them, it just worked absolutely perfectly, and they can pay well above market rent for it, and we've got a really good lease with them. Now, the covenant strength is unreal because it's just it's a standard limited company. They've been trading for over 5 years, so we've got a good set of accounts. We can see how profitable they are. We know the stream of income that pays them comes from the council directly to look after these mothers and babies. So just really, really explore that CQC register, I think, is the last point for me.
A ton of homework. Yeah. Before you convert, but also before you buy, and it allows you to then, have a really good idea of where you're shooting, I guess.
Yeah, I think so. That's really important.
Fantastic. Awesome. Well, look, I appreciate that. It's a good piece of last advice. Last question. How do people reach out to you? How do people follow your journey? How do people see what you're up to?
Yeah, I guess it's a funny one. So I'm not really one for social media. I try and actively avoid it. We were putting a bit on Instagram back in the day, but it's not something that I really focus on. I think the best thing, if anybody wants to sort of shoot me any questions or anything like that, I'm happy to look over anything. But the best thing to do is just drop me an email, I think, and then I can come back, or I can look over anything and potentially put people in touch with any providers if they have existing properties, and we'll look over any opportunities that they're looking at potentially purchasing and help them get them postcode checked. So the best email for me is just rhys@let-co.com. So RHYS at Lima Echo Tango -Charlie Oscar.com.
Perfect. Nice and simple. Awesome. Rhys, thank you so much for your time.
My pleasure.
Yeah, looking forward to writing this up.
Awesome. Thanks, Alex.